Well, as far as the stock markets are concerned, they have shown a very significant recovery from the March lows. In fact, looking at the current market valuations, a lot of analysts believe that we may see a correction in the markets yet again. But in fact, here we have an interesting report by Goldman Sachs wherein they have detailed 10 reasons why they believe that this bull market has further room to run. In fact, they say that there may be near-term setback, but nevertheless, this bull market is likely to continue going forward also. Well, taking a look at all these interesting points that they have detailed, starting with they believe that this we are in the hope phase. Well, this is the first part of a news cycle, which usually begins in a recession as investors start to anticipate economic recovery, and this is typically the strongest part of the cycle. And what we are seeing this year is typically the hope phase. So they believe that the bull market would continue. Next, they also add that the economic recovery looks more durable as vaccines are becoming more likely. So this is one aspect that they have listed as far as the reasons are concerned. Also, they have recently made an upward revision as far as the economic forecast is concerned, and they believe that there's a likelihood that the other analyst expectations will follow. Also, if another interesting point, if you look at the bear market indicator, which was at a very elevated level in 2019, is currently pointing to a relatively low risk of a bear market despite very high valuations. They add that the policy support remains very supportive for risk assets. Well, when it comes to central banks, they're ready to pump in as much liquidity as required, while on the other hand, government through their fiscal measures have scaled up their willingness to support growth. Well, they also talk about that the fact that equity risk premium, which is basically your excess return earned by an investor while they may invest in the equity stock markets over risk-free rate, is showing some room wherein it could fall further. So this is another aspect that they have detailed as far as the reasons for the bull market to continue is concerned. They also add that the entire negative real interest rate scenario is highly supportive to risk assets in an economic recovery. Equities as an asset class offer a reasonable hedge to higher inflation expectations, and they add that equities currently are looking cheap relative to corporate debt and also particularly for strong balance sheet companies. Lastly, they also mention that the digital revolution would continue to gather pace going forward. They believe that this transformation of the economy and the stock markets has a further to go up, and these companies are typically the ones who would drive and would continue to drive the valuations and the returns in the bull market. So it's a reasonable assumption and really interesting points that they have mentioned in their recent report, wherein they believe that the bull market is yet here to stay.